All right. What is going on, beautiful people? Today, we're going to be going over the key terms that you need to know as a beginner trader. So when you start seeing certain, terminology or phrases being used, you're not looking at it like we're talking a different language. It's really important that you know this. This is obviously for beginner traders. So let's get right into it, guys. So first things first, as you can see, we're going to be going over your stop loss. Okay, so your stop loss is the risk protection that you set on a trade. So for example, if you're risking 20 pips, then 20 pips would be the size of your stop loss. The broker you use will automatically remove you from your position once the market price hits the price point of your 20 pip stop loss. Pretty straightforward. So by the way, when you input a stop loss into the market, into the broker automatically takes you out of the market at that particular price point. Next, your take profit. Okay? Your take profit is the reward price point that you set on a trade. So literally the inverse of a stop loss. For example, if price reaches this target area at, let's say, 50 pips in profit and gain, the broker will automatically remove you from your position with your profit secured at 50 pips gain. Pretty straightforward. So stop loss and take profit are going to be your best friends as a beginner trader because it allows you to predetermine your risk and predetermine your reward. Okay, next, your entry. This is pretty straightforward. I don't really have to explain this too in depth. It's the area that you go live in the market. So, if you're going to enter gold at, $2,600 an ounce, $2,600 an ounce, that's when you buy into the market. That's your entry. Pretty straightforward. So your entry is your entry is the point in the market, the specific price point that you execute and go live. Okay? Next. Bullish means buy. Bullish can also be described as long. So if you ever hear me say or somebody else say, I'm going long on gold, that means they're buying gold. It's a buyer's market. You're going to expect an upward movement. And the reason that bullish is associated with buy is because think of it like this. Have you ever seen I think they're like rodeos, right? Where they put the bull in there and some guy is running from the bull. What do the bulls do? Let's pretend I'm a bull. They go like this, right? And they use their horns to literally hit you and then throw you up. I think that's a good way of explaining it, right? So the bulls drive price up. That's what bulls do. They bow their heads. They gain some momentum. They use their horns, they stick it into their opponent or whatever's in front of them or their obstacle rather, right? And then they drive it up. And that's what the bulls do. I'm not going to break my neck pretending to be a bull, but if you don't know what a bull does, you can go on Google or YouTube and type in bulls and you'll get it. I believe in you. Okay, so next, bearish, right? Bearish is the opposite of bullish. Now, usually when you see a bear attack, the bear is standing up on its two legs and then it comes down at you. The bear mauls you, right? So the bear is standing and then it comes down and attacks you. So the bearish term, right? A bearish market means that you are in a seller's market. Okay, that means that you should be seeing some downward movement. Now, if you ever hear somebody saying, oh, I'm going short on gold, that means that they're expecting gold to decrease in value, for gold to drop down, and you're looking to sell. Okay, so bullish means buy, bearish means sell. Long means buy, short means sell. Did I say that right? Long means buy, short means... Okay, yeah. Jeez. Long day, guys. So, consolidation, okay? Consolidation means when the market isn't really going up or the market isn't really going down. So, bullish means, decisive upward movement. Bearish means decisive downward movement. And then consolidation means there's no decision. The market is neutral. It's just going sideways. So the market can pretty much only go three ways: up, down, or sideways. That's consolidation. Price is consolidating in a specific area. Next, when you go on your broker and you go to, let's say, place a trade on MetaTrader 4, you're gonna see ask and bid. And essentially the ask is the lowest price that a seller is willing to accept for an asset. When we say asset, we're referring to the market you're trading, whatever currency pair you're trading, right? So the ask is the lowest price that a seller is willing to accept for an asset, and the bid is the opposite. The bid is the highest price that a buyer is willing to accept for an asset. So I want to take some time to just make this statement. Whenever you're placing a trade, whenever you're entering, or whenever you're exiting, there's somebody on the opposite side of that trade. So in order for me to buy, someone has to sell their shares so I can take those shares and buy them. Whenever I want to sell, then that means somebody is buying. So the market works like that. It's not just this infinite pool of money. I know there's trillions of dollars in the market, so it seems like that. But on every end of a decision you make in the market, somebody is on the opposite end, either winning or losing. So if I make money off of buying, then that means some sucker out there is losing his money from selling when he's wrong. And then when I'm wrong for buying, then there's some sucker out there making money selling when I'm buying. So on and so forth. That's kind of how ask and bid work. Now, next, that you kind of understand that concept of somebody's on the opposite end of the market. Whenever you make a decision, liquidity means money. So liquidity means money. Now, if you think of the banks, the term bank comes from river banks. What happens in the river? Well, the water, which is liquid, flows, right? So start to understand that banks represent liquidity because they hold your money. So in a market that's very liquid, that indicates that it's either very quick, easy, efficient to buy or sell an asset. That means that there are a lot of people in the market, and that'll lead into the next term, which means volume. So if you watched the previous video about trading sessions, I introduced you to volume, and now I'm going to give you the quick definition of what it means. Volume is the amount of shares that are being transacted during a trading session. So obviously, depending on your trading session, there are higher amounts of volume being pumped into the market during certain trading session or during certain, fundamental news releases. So volume just literally means the amount of shares being transacted during a trading session. So ideally, when you trade, guys, you want to trade in a market that has high volume, because that means that there's money, liquidity being pumped into the market at a rate of high volume that'll send your trade, your market that you're trading, either bullish or bearish, right? And then when there's not enough volume in the market, price consolidates. So I tried to put these in order for you to understand them. Hopefully I did an okay job. Next, when the market is very aggressive and there is a significant amount of volume, then you will probably see an aggressive amount of volatility. So volatility just literally means the up and downward fluctuations in price, but it generally indicates aggressive fluctuations. So when there's a lot of liquidity, when there's a lot of volume in your session, you should see volatile markets. When the price is going, oh my God, up and down, crazy, that is volatility, crazy up and down, right? If you know anything about crypto, you know, in Bitcoin, you know, flies to like 60 grand and then drops to 30 grand, that is very volatile. So now you kind of understand that. And lastly, we're going to be going over equity. So equity, you've probably heard about it if you ever watched Shark Tank or know anything about business. Equity is just literally the buying power in your trading account. It's the current value in your trading account. But something that people should be aware about is that if you're floating in profits, your equity will be higher to represent the amount of unrealized gain. So unrealized gain means that your account's floating in profit, but you haven't closed your trade out and secured the profit. So let's say your balance is, I don't know, $1,000, but you're up $200 on a trade. Your equity will be $1,200 and your balance will remain as $1,000. So the equity is the current value or buying power in your trading account. And, you know, obviously it can be kind of confusing because your equity is also your account balance. But literally when you go on a broker, let's say MetaTrader 4, it'll show your equity as floating. Floating means like the unrealized gain. So, you know, if I'm floating $200 in profit, it's floating because I haven't taken it and you know, landed it. I haven't touched down and landed. We're still flying in the air. So, you know, it could still go back down and your $200 in this example could go down to like, I don't know, $100. Now your equity would go from, in this example, I don't have any visuals for this, the account balance is $1,000. Your equity was just $200 in profit, so now your equity is $1,200. But then the market's volatile and it goes and reverses on you a little bit and you lose some profits. Now let's say you lose half your $200 profits. Now that's $100. So your equity would decrease from $1,200 to $1,100, and the profit wouldn't be considered realized until you close the position, and then once it's closed, your account balance will then increase. So guys, pretty quick, simple, straightforward video, but I definitely felt it necessary to make. I don't want you being a noob in the markets, guys. I want you to come to the markets confident, understanding what these words mean. I know how intimidating and confusing it can be as a beginner, especially when you hear all this crazy words being used that you don't actually understand. So understand or overstand, but that's a whole different conversation on etymology. So guys, if you enjoyed the video, definitely thumbs up, like, comment, and subscribe. The Forex Basics Mastery course is coming in hot. So there's supposed to be fire there, so imagine flames like I'm Prince Zuko and I'm fire bending for all my Avatar nerds. But guys, that's pretty much it. Stay tuned for the next video. Definitely take a screenshot of this or take some notes if you haven't, and I'll see you in the next video, guys. Peace, love, bye.